you join us?
Hi, I'm here. I'm here. I'm listening today while I get ready for appointment, so I'll keep chiming in. So I'm relatively very new. I started February 1st. So I've already gone through the first month of classes, and this is just the second month for me of starting with the Ignite and ending. A lot of very, very, very good information. It's just a lot all at once. So I'm still trying to soak it all up.
Yeah. So I know you were busy, Kristen. You want to jump in?
Yep, I'm Kristen Delves. I got my license beginning of January. I've been hopping in and out of the Ignite classes, and I did list my first house about 2 weeks ago and had 8 offers, and the seller accepted an offer. So I'm in the process now of just kind of going through the rest of it till close.
Yeah. Awesome. Well, congratulations.
Thank you.
Bill. Is Bill there? Maybe not. All right. Is anybody in here that I didn't call on? I don't think we're. No, I think I got everybody. Okay. So, today I want to use a PowerPoint and share my screen with you, and we're going to go through the slides and engage in some discussion as we go along. I figure that we'll take a break at let's say 10:15, an hour from now, and then we'll finish up after that. Sometimes I get done early. Just depends on how it goes. So I'm going to share my screen now. You do this enough times and you actually figure out how to do it. All right. So we're on session 8. This is, presumably you've been through all the Sparks. Now you're starting to learn the essentials of the business. And today our focus is going to be on financial basics. And basically, I think you're going to find that a lot of these courses start with the same kinds of slides, the same information each time. But this is really what a successful agent does every day. They do things to grow their business, and they do things to run their business. And today we're going to focus on running the business, and this would be managing our money. So we're going to talk about a little perspective here. I was going to ask you, when you took your course, does anybody in any of those courses, did any of them talk to you about what you do with your money when you get it, how your commission checks should be handled? Are there any nods or no's? No, it really isn't. And I, having been through, I've been part of a couple of brokerages over my career, that wasn't something that was taught either. You get it from classes like this, or if you're working in your GRI designation or some of the other national designations that deal with the business part, running your business. So today hopefully we're gonna spend some time together and help to teach you some habits to build a financially sound business. So we'll be employing techniques and models that are used by the most successful real estate agents for managing their commission monies. And it's to kind of give you a kind of a roadmap to help us so that when it's time to do your taxes, you're not jammed up with owing the IRS a bunch of money. So we start talking about our habits, and I think you all got a workbook. So in your workbook, you're going to see these things, and these are just some basic steps to actually, as you work along them, it's going to make a big impact on you. Okay. So first thing we're going to do is we set a profit goal that funds your big life and pursues and then you pursue the activities to achieve it. This is a lot of this work is done through, through following the worksheets and spending some time reflecting on what it is that is most important to you and why you're doing this, why you are going to immerse yourself in this business. It's not just because you like houses. There's a lot to it. And as you get more familiar with Command, you'll see that there's a lot of help in there where you can actually set your profit goals. Then we're going to estimate and save for and be able to pay the taxes on time. And we're going to use the proven methods and systems of the Mrea chart of accounts. We are given the information on that chart of accounts. In other words, in some kind of software keeping, whether you use a spreadsheet or whether you use Quicken or QuickBooks, and there's probably many more. You learn to classify each expenditure so that when it comes time to do your P&L, your profit and loss statement each month, you're able to see where your money is going. And then you're going to learn to be fiscally savvy by reviewing your financials monthly. That's the profit and loss. Learn to pay yourself a salary, and then preparing for a financially secure future. These are the habits that you learn, that you need to learn. Because money is good for the good that it can do. So if we look at these two examples, let's talk about it a little bit. See which one you would consider financially sound. Which one would you consider financially unsound? Can you see my screen all right? Any comments? Anything pop out at you as you look at this? Okay. So on the left side, what we see here is we see an example of a sold commission of $9,000. They're just using an average sale price and basing it on a 3% commission, 3% per side, whether it's a listing side or a selling side. Each transaction has two sides, which is why when you look at your pipeline in Command, you see a pipeline for listings, you see a pipeline for buyers, and then there's another pipeline for leases if you do lease work. But anyway, when you sell something, there's a commission that's generated. And then out of that commission, you are paid by the market center a certain amount, depending on whether or not you have met your cap and your royalty. This is illustrating one where the agent is new. Maybe it's the first commission. They have not satisfied the market center cap yet, so they have a little bit of cost of sale. It's called a cost of sale. You only get charged for it if you actually have a sale. And on this, it's representing they've taken out the royalty, which is 30%. I mean 3%. Hold it. The maximum royalty a year is $3,000. They take it in increments of 6% of each closing that is sold. Hope I didn't just confuse you. And then the company dollar for the cap is taken out. That's for the market center, and that's 30% of the check. So what you're seeing here is the resulting net commission that the agent received, which was $5,760. Then you've got your choices. You've got the personal bank account, and there's also you can see here that this particular agent put it all in their personal bank account, and so then out of that personal bank account they put it in their wallet and spent it. There was nothing withheld out of that check for business savings for their business, and there was nothing taken out to put aside for Uncle Sam. So that's why you got those two big circles on that. So that is unsound, that is unsound practice, and without a doubt, if that's the way you do if that's the way you handle your commission checks, you will end up at the end of the year with owing the IRS and jammed up. You don't want to do that. So I think we have to mute somebody here.
Mhm.
Okay, but I'm not sure who that is.
Sounds delicious, whoever it is.
Yeah, yeah. Let me see if that does it. Uh-huh.
All right.
All right, now we can continue. I won't have to keep competing. Okay, I didn't lose you guys on any of that, did I?
No.
All right. So the other side, which I just lost in my, I'm not sure how. Does anybody know how you go back? Nah. Let's see. Yeah. Back up to this one. All right. So the other side here on the left, this is the considered fiscally sound. And you could just see, essentially, it says same $9,000 check. The market center took what they needed to take at that point in time, which was 30% plus 6% for the royalty. And then it gave a net check to Jessica for $5,760. And she put the money in her, she put in her business account, she put 1728, which represented her, what she has set aside for her business expenses. Business expenses should not exceed 30% of your gross for GCI. So that probably represents that number, I'm guessing, but I'm going to just check that out. Yep, that's not it. Let's see. She must have calculated what her business expenses are, and some examples of business expenses are like dues. Can anybody offhand tell me some more things that would be business expenses?
Car,
Yep, car.
fuel, clothes.
Marketing expenses.
Yep. So I just,
Computer.
so what was that?
A computer.
Yep, parts, writing off, being able to buy the different equipment that you need. So as you do if you learn to do a budget, you'll calculate that out. And I'm seeing here that if I did check it again, and that number does represent 30% of the GCI. So she set aside that for her business expenses. And then what she did, so that went into her business account, and then she put the remainder into her personal bank account. Now, in her personal bank account, her personal money, she has segmented it. So she figures out how much based on where she lives, what her state and federal tax liability is going to be on that much money. So it's that much money is based on what she actually got to put in her bank account personally. The business deductions, you do not pay taxes on the business deductions. You deduct the business deductions from your from your gross income, and what's left, which is put into your personal bank account, that is where you calculate your income taxes. So she has figured out that out of that $4,032, she's going to have a liability of about $1,613. So when she subtracts that out, what she actually has left over that she can go and spend on her personal life is what is in her wallet now, which is $2,419. Does any of that make sense, or does anybody have questions?
You're going to go through self-employment taxes.
Excuse me, Jason, say it again.
You're going to go through self-employment taxes.
you see down there in the bottom where it says state and federal tax, and then beside it, it says self-employment tax. See that? So your self-employment tax has already been accounted for in this tax savings account that you will create. And your self-employment tax is a certain percentage. I forget what it is now. I use software. About 15% perhaps. Let's see if I can figure that. Exactly. So if you follow this model, you will have you'll have enough money set aside for your self-employment tax, which is part of your tax liability. So out of this $9,000 commission, before considering 9,000, considering she's still paying cost of sale to the market center, and she takes her business expenses out, and then she removes what she needs to pay Uncle Sam. Her money in her wallet that she can spend is $24.19 out of that, and that's really quite it's quite comfortable knowing that you have treated your commission check like the business person that you are, and you have allocated the right amounts to the right categories. So here, it's pretty much it's exactly what we just said. Out of one transaction, if it was a $9,000 commission, the net payment check was $5,760, and after all is said and done, $24.19 is actually in your pocket. That's what you can go buy stuff with. So we're talking about some MREA models now. Let me catch up to my book. So, if you think about it, financially sound practices will really help you to sleep at night. And, I think just about a lot of agents have the same story where at one point in time, they really weren't sure. They didn't really allocate where things needed to be. And when the commission check came in, it was just super tempting to spend it or to use it to pay bills or anything like, things like that. And if you're not conscious of what you're doing, then when April 15th runs around, this year it's May 15th, you really figure out what's gone on. But if you're doing a monthly profit and loss where you can pay attention to your business, that will also help to keep you on the right track. So we're going to look at some models of the MREA business, the MREA, the red book that we all know about. The first thing we're going to look at is the economic model. So on the economic model, before I alluded to the fact that you're advised to keep your expenses within 30% of your GCI. Everything that we talk about, that big number, that is the GCI. That's the amount that's actually generated, and we're going to use 3% as a basis for that. So every sale you have, if it's a $200,000 or just depending on whatever the sale is, 3% of it is your GCI. So whenever you look at information, like when people talk about what teams are generating, they're talking about not the volume as in I sold, $1 million or $2 million or $3 million. They're talking about what was the resulting gross income that came into the market center because of that work. So when we look at the MREA economic model, the income is GCI gross. That's your commission income. And so they're always talking that's 100%. That's your 100% of your GCI is considered your gross income. And then the next little box there where it says expense, they got two kinds. You've got cost of sales and you have operating expenses. Do you guys know the difference? Does anybody want to chime in there? The difference between the cost of sales and the operating expenses.
Cost of sales goes to the broker and the operating expenses are you running the business.
Yep. Well, and what's also special about cost of sales? What I'm getting at is a cost of sale it only happens if you actually have a sale. So it's not, you're not going to owe anything to the markets, typically you're not going to owe anything based on your sales if your sales don't come to a fruition where there's actually a transfer. So cost of sales includes things like the actual market, the company dollar, which is whatever your cap is for your market center. In my market center, our cap is 21,000. So once we have contributed 21,000 to the market center, from that point forward until our anniversary date, we get to enjoy 100% of our commission. The cost of sale for the royalty, which is a KWRI expense, that is the same for everybody, and that is a cap of 3,000. You'll never pay more than $3,000 in royalties. Now, I've been with companies where, I paid 8,000. I paid 8% or 10% of every commission was paid into the company as a royalty, and there is no cap on that. So it doesn't matter whether I've contributed 3,000, 6,000, 10,000, it doesn't matter. It's always going to come out of every single sale. Whereas in Keller Williams, it's only going to come out of your sales up to the point where you've gotten a $3,000 contribution. So that's a cost of sale. I never get charged that unless I have a sale. I never get charged cap or company dollar unless I have a sale. So those are cost of sales. Another example of a cost of sale would be a commission, like a referral fee that you may be paying somebody, because they gave you the lead. That would be a cost of sale because you do not pay that referral fee unless you have an actual sale. So just keep that in mind when you're, when you're thinking about it and you're thinking about how your money breaks down. Keep in mind that cost of sales only happen if there's actually a sale, a transaction that closes. Now, along with that, there's another expense. It's called operating expenses. Now, these expenses are going to be incurred regardless of whether you have a sale or not. These would be things like desk fees, dues that you pay to keep in business, your supplies, you had mentioned before, auto payment, gas, different tools, different subscriptions that you might subscribe to. These are also like our tech fee that we pay monthly, errors and omissions. These are all operating expenses that you need to be aware of and budget for. So every time you look at your profit and loss statement, if you look at expenses and you see that those expenses are getting out of line, if you eliminate them, if you're able to, if you're not under contract to pay them, then that automatically lifts up your bottom line. So your profit is going to be your gross commission minus your cost of sales minus your operating expenses. That's your profit. The profit is what you're going to be paying the IRS on. Any questions about what I just went through? Did I put you guys to sleep?
When we sleep, we're talking about money.
Okay, don't go to sleep. Tough crowd here. I can't see your faces because I got my screen in front of me, and I've got this little box like this. That's one of the things that I loved Zoom because we you don't have to go very far to get there. And it's really convenient for a lot of people to attend. But believe me, classroom is so much better for the instructor because you can see whether people are slumped over, if they're doodling, or you can see whether you need to step it up or not. So anyway, so your profit is what you've got after you've taken your gross income, you've subtracted out your expenses, it's your net profit. And what this economic model is saying is that you should be shooting for a 40% profit, meaning that if you have your GCI at 100% and you limited your cost of sales to 30%, and you limited your expenses, your operating expenses to 30%, then what you would have left over is 40%. So on a $10,000 commission check, for example, and yeah, they're out there for sure, even in the lower average price markets, it's very doable. So on a commission check of $10,000, keeping your cost of sales at 30%, that would be $3,000 out of that. And then your operating expenses, keep them at $30,000, would give you that $4,000 profit. So that $4,000 profit, that is what you're going to be dividing up into, some for Uncle Sam, some for basically it's the income taxes, the self-employment taxes, and then what's left over would be in your pocket to spend. So let's talk about the flow of money. So your income is what comes in, your expenses are what go out, and your profit is what's left. So what we like to do is try to figure out how many houses do we have to sell in order to arrive at that profit that we want. So by figuring out what you want your profit to be first, and then calculating what you can allocate for what you will need for expenses and for cost of sales, that will bring you up to how much, what kind of income do you have to generate? So how many homes do I have to sell? Any comments on this? I see, I'm looking at your faces now. 2 people have checked out. All right. Okay, let's keep going. So when we talk about income, so when we're looking at income, there's only certain numbers of categories of income that you can earn. One is your listing income, one's your sales income, referral income, and leasing income. So your listing income, this is the income that you generate by taking good sellable listings. So those are all going to go in the top of your pipeline in command on the listing pipeline. And so when the sale is complete, the gross income that you come from that goes into your income calculation, and it's categorized as listing income. Then your sales income, those are the buyers that you work with. If you have a buyer that buys a property, whether it's your own listing or anybody else's listing, it is, when it closes, that's your sales income. Referral income is the money that you receive when you have passed a buyer or a seller off to another agent, maybe in a different area. Well, when that sells, you will receive whatever your referral fee was that you agreed upon. And it is, it's all negotiable. I find that from between Keller Williams agents, it's usually somewhere in the neighborhood of 25%. So a 25% referral. So basically, when they have successfully done the work and closed the sale and it closes, you're going to receive 25% of that gross income. if you take referrals from some of these companies like Opt City and other types of referral companies that are out there trying to pass along their leads to you, you can expect to pay 30, 40, 30, 35, 40% as a referral fee. So just beware of that. Got to figure out whether it makes good business sense to accept those types, but that is income. And your leasing income, those are your, when you happen to have rentals, and you're on that, whether you're on the rental side where you listed the rental or whether you've got the tenant and you sell it when that closes. That's usually pretty much immediate income, but it's classified as leasing income. Any questions?
Traditional referral amount from agent to agent. So I refer somebody to you, right?
Yep.
Somebody's moving on the outside, I refer them to you. Could you walk me through that again?
Sure. Jason, you called me up. You said, I have a great buyer that's coming out your way, and they want something in Oneonta. We discuss it. We talk about your client. You introduce me to your client, and I take it from there. If they bought say they bought a $300,000 home from me, and this has happened. I'm working with a referral right now, KW to KW. So $300,000 sale happens, which is a nice sale in Oneonta, upper end, but not the most. So 300,000 times 3%. It's a $9,000 commission. That's $9,000 gross. You referred it to me. So when we close, my MCA is going to send your MCA 25% of that. So times 25%, you're going to get a check from my MCA for $2,250. So I'll tell you, we have this awesome referral applet in our command. Learn to use it, because and that's a total class on its own. But there's plenty of videos on it. As you build the practice of whenever you're working with somebody calls you, they're interested in coming into your area, and you always ask them, do you have a house that you need to sell before you can purchase here? Very matter of fact. And then a lot of times they'll say, well, yes, we do, but our market's great. It shouldn't take any time at all. And I say, great. Have you chosen an agent yet? And if they have not, then you ask them, would you mind if I give you if I can refer you to an agent that is, some really great agent in your area? And then a lot of times they'll say, sure, like that. That's how it begins. So you start to develop that practice of finding out when people are coming to you, finding out what they, where they're coming from, and do they have something they need to sell. That's one source. Another one is when you have a seller and they've listed with you, and they're going somewhere. You ask them, where will you be going? Do you know where you're moving to? And then you can ask them the same thing. Have you found an agent in that area to work it? And then, so you just have to open that conversation with everybody to try to, you'll succeed in getting referrals, getting opportunities to send referrals. As far as receiving referrals, you get them by developing relationships within the network. So that's how that works. Did I walk you through well enough on that? Jason? So now of the commission, 25% is referred, right? Yep. Is referral. Yep. So then the remaining to the agents is reduced by that amount? Yeah. Are you the person giving it? You're giving the referral, right? Yes. So I gave you the referral. So right. You've got the referral. You closed the deal. Right. 25% of the gross commission income comes off the top, right? Right. So you would get the difference. You would get the difference. So you are the referring agent. So out of that 300,000 times 3%, minus 25%. Yeah, your check would be the difference. So you take that 10,000 minus the 2,250. So you get 70, basically you get 75% of that sale. So $300,000 sale was a sale times 3% commission. 9,000 was the gross. You're going to receive 75% of that. You're going to receive a check for 6,750 if you were the person that completed the deal. Whoever does the actual work and handles the sale, they get the bulk of it. The person who gave the opportunity, the lead, sent the lead to you, that person will receive 25%. So that's so your question was, if I gave you a lead, what would I get? Is that right?
No, if I gave you a lead, how does that impact you? Right?
Me.
So, but who cares, right? They're going to close, they're coming in, so they're a pretty good lead.
Yeah. So how it impacts it, if I just know that if I received a lead from you, I know that when that commission closes, I have to give you payment for that lead, which was 25% of the gross. So since it was a $9,000 gross, I have to give you, because you gave me the lead, I got to give you 25% of it. So you're going to get a check for $2,250, which is going to be run through your market center. So you'll have whatever you have left on your cap will come off of that. It's going to be subjected to the royalty and the company dollar. But bottom line is, you receive a pretty nice check, and well, all you did was have it's important. You had the relationship with that particular client. They trusted you to pass it along to another agent to handle, and you're going to be compensated for giving that transaction, giving that lead.
Thank you. Perfect.
You're welcome. All right. So when we look here on the expenses, we talked a bit about this. The cost of sales. That's the cost that's related to each transaction you make. The cost of making the sale. So commissions paid to your office, like your company dollar, the royalty fees paid to KW, and then the commissions or splits paid to employees or independent contractors involved in the sales, and then your referral fees. So where it says commissions or splits paid to employees or independent contractors, this is the independent contractor is usually what you're going to be dealing with. And that's going to be if you were with somebody else sharing on that transaction. Since you won't be keeping the whole amount, they're going to get a portion of it based on what your agreement was with them, just like when deals are split between agents. And then the bottom one, the referral fees, that's exactly what we just talked about. So you're not going to have all of these costs of sales related to every single transaction, but every transaction is going to have some of these things, unless you have already paid off the market center for the year. If you are enjoying 100% of your commission, then and if you did not split this deal with any other agent, and if you did not accept this deal with if it was not a referral to you, then your cost of sales will be zero on that transaction. But otherwise, for the most part, you're always going to be dealing with some kind of cost of sale. Okay. All right.
Sure, I got a question.
Yeah.
Now, at the end of the year, does KW send out 1099s?
Absolutely.
Okay.
You get what you're going to get is you're going to get a 1099 from your market center,
Okay.
and that's going to have in there that's going to be your full accounting. And also, as you learn the system better, you're going to learn how you can look at the reports and at my KW. Your report, your own specific report, is available to you on a monthly basis, which tells you every single transaction you had, what your income was, what was paid in company dollar. It's just awesome. And it can keep you really on top of things.
Wow.
I love it. I tell you, like I said, I've been with a couple of companies, and this is the first one that has been so openly transparent to the agent. Okay, so we're going to go to the next one. Now, yeah, I think sometimes we get talking more about, so we talk about these things before the slide comes in, but digging into the cost of sales. All right, so this is talking about the company dollar or the royalty, and what is the net commission check that you're going to receive after the cost of sales. So there's a formula for that. You got your GCI, which is 100% of the commission that was generated. Usually, in our cases, it's usually gross sale, the sale of the property minus times 3%, which gave us the GCI. So then we have to take the company dollar off of that. And what the company dollar, how it's calculated until you reached your cap, is calculated by taking the GCI times 30%. And then you also have to take off the royalty, which is the GCI times 6%. That's what gives you your net commission. So if you have already capped on royalty, but you haven't yet capped on company dollar, how do you calculate it? Well, in this case, you've got your GCI, and you subtract out your, it says here minus royalty equals the net commission. Well, I think this is a little bit messed up, because because basically, if you have already capped on your royalty, which is much easier to do, that's 3%. That's 6% rather. It's $3,000. So once you have paid $3,000 in, that's not even part of the equation anymore. Now it's just strictly the gross commission minus the 30% to go towards your cap. And then once you have paid off your 3,000 commission, the 3,000 and the whatever your cap is, I'll use 21%. $21,000 in like our case. So once I paid 21,000 to the market center, 3,000 to KWRI, I now have I've met my cost of sale obligation when it comes to the market center and KW. So at that point, whatever the gross commission that comes in, I keep them. It's all mine. It's all mine. The only thing I have to take out of it is my taxes and whatever my expenses were. Oh, do you see what I'm saying? Can you envision that? I think that was. So I went back to, I feel like I'm losing you guys. I went back to what they're trying to calculate for you here. What's your questions on this particular slide? Hey, Jim.
Hi.
Hi, Jim.
So
yep.
are you saying this is once the $3,000 that you hit, where is that coming from?
That comes out of the gross commission.
Okay.
Always. What they always do is every gross commission that comes in, they calculate 6% of it.
Okay.
And then that number that gets accumulated until it hits the point of 3,000. Once it hits 3,000, it's not calculated anymore. It's not deducted anymore.
Okay.
Does anybody here know what your cap is for your market center?
And that resets every year.
Oh, does it? Okay. Yeah, and yes, it does reset every year. I said everybody is figured on their anniversary, on an anniversary date when they came into the business. Excuse me. When they come into KW, like my anniversary is in October. So everything I close up to September 30th is 1 year. And then once October 1st comes along, it starts over. Don't mind me, you got a cough now and then. So yeah, it's like a restart every year. But in your market centers, is 21,000 the target that you have, or is it less or more per company dollar? If you don't know the answer to that, ask them, because that way it gives you it gives you something to shoot for. So for me, I'm trying to reach that $21,000 mark as early in the year as I can, so that for the rest of the year until September 30th, I can have 100% of my commission. Then you can bank that. So it gives you more incentive, I think, to really focus on putting deals in the drawer. And right now, because it's such a seller's market, meaning that if you have a listing, you're going to get a sale. You're not, if you could be the person that has the listing, you've really got the cookie. So focusing on that is extremely important. Now, of course, buyers, every listing you get, you're going to get a couple of buyers out of it. And those buyers, those are in this state right now, in this market, buyers are much more, they're pretty immediate income, because other than the time it takes to process and close on it, if you can be the person that got the accepted offer, you're off and running really quickly. But if you're the one who has the listing, you're definitely off and running. So really, it's just something you keep tracking from month to month, the income that you focus on getting those appointments and getting those deals in the drawer, and focusing on understanding that what we're really talking about here is we're talking about cost of sales, and cost of sales here being what is your company dollar amount that you're responsible to give the market center, and your royalty.
What did you say your number was?
Or ours is 21,000.
Okay, I have written down for the Brighton side, I have 23,000 is the max that KW will take out.
And is that what is, so it's you have 23,000 plus the 3,000 for the royalty, or is that your whole amount? You got two.
Yeah, I was just looking like at notes I took when I first joined, and in my scratch notes, that's what I can make out. 23,000 was the max that they would take out before I start earning 100% commission.
Okay, so KWRI has the same number for everyone for royalty, and that is $3,000.
Okay.
So if you took that number you have, that 23,000, you subtract the 3,000 from that leaves you with the 20,000. So your cap for your market center is a little less than mine. So you have a $20,000. You need to contribute $20,000 to the market center, and after that point, for the rest of your year, you will get 100% of your commissions. And
okay,
yeah, so good. I'm glad we got that covered there. And I'll tell you from experiences from other companies I've had, I have paid I contributed $40, $50, $60,000 to the broker, and it never stopped. It didn't stop. It just kept on going. Whatever you did, and then so that was a breath of fresh air. I mean, I do realize that we have our own responsibilities as far as like for lead generation and that, but it's still it's nice to know that once I'm 21,000 for me, and then I'm done. And again, I already addressed the royalty part there, where it's 6% for Keller Williams. It's more like 8%, 10% for other franchises. So you're in a good place. I have this cough that will not quit. Okay. Okay, so now we're going to talk about building our future. I think we should, if you don't mind, I'd like to just take a short break instead of 10:15. Take a break now and come back in 10 minutes. Is that all right with everybody? I hope so.
Sure.
Okay.
Hi, it's Jim.
Hi, Jim. It's Tracy.
Hey, how are you?
I'm doing okay. How are you?
Great.
I ordered the roofing stuff because even if I sell it, I have to put the roof on. I can't not have a roof.
Yeah, very good.
But I may have lost my mind, but it had a green roof to start with, so I stuck with Chateau Green.
Oh.
I was like gonna get the dark black or the gray, and then I just kept looking at it, and I was like, it's like such a sort of trademark around here, this little green roof, and I was like, you know what, I'm just gonna do it. I hope I don't regret that. You're like, Tracy, no, that lowers the value. You should tell me, but
Nah, it doesn't make a difference.
I don't think so. But you're not going to believe what happened the other day. A ruffed grouse flew. I didn't see it, but I found it. flew in, a storm window. I mean, shattered glass went everywhere.
Oh my.
It died, of course. But a ruffed grouse, I mean, they don't even fly like that, you know?
Yeah.
So something, it must have been on the ground and a hawk or something startled it and it did that kind of burst, is all I can imagine. But anyway, can you believe it? A ruffed grouse.
Yeah.
Into my window,
Wow. That's unusual for sure.
right? So, how are you doing?
Good. We're still staying really busy.
I believe it. I finally got a breath of air, and so I said, well, let me just call you and talk to you a little bit. And because, you know, I've been looking online, but I only see things that are way outside of anything that I could afford right now. So if we sold my house, I'd need to sell it for enough that I could actually buy something, you know?
Sure.
But I don't know, you know, what you think we could do. Like, because I can't find anything for $200,000, you know? There's nothing. I haven't seen anything like that I would even consider.
Right. Yeah. I haven't really looked lately. So, but
Okay.
I'm sure you've done a pretty thorough search. So, but I'll see what I can find too, just for the heck of it.
Right. I mean, you don't need to look for me, but I'm just thinking, like, when you said I have somebody who might be interested in your house, do you think, are they interested? I mean, like, I was like, the more I looked, the more I was like, I don't even know if I would sell it for 200 right now, because I couldn't get into anything, you know what I mean? So,
Right. No, I understand.
so I was like, wait, I might need to press pause unless we really find something. Then maybe, but I can't put myself in a position where I've made money, but I have nowhere to go.
Right.
And that won't help any, you know?
Oh yeah. No, I think that we just have to keep looking and you know, I mean, if Leela, who is this potential buyer, is still around, you know, and we find something that you're interested in, then it makes sense to see if we can do, you know, if we can do it. So.
Right. But your price range you were thinking was close to 2, right?
Well, I hadn't really, yeah. Oh, for yours, yes.
Yeah.
Yeah. And I didn't mention any numbers to Leela. I just said, because she said, I really want to be down. And so I said, well, you know, I've got something that might be available coming up. So that's
Right.
that's as far as my discussion went. So.
Well, so I think I'm going to go ahead and proceed with doing the work, because I think I might as well. Make a huge difference in the house. And the bedrooms will have a little more privacy from each other. So I'm going to go ahead and, you know, proceed. You know, if something comes up, call me. I want to come out and see what you're up to with the sustainability thing.
Yeah.
And I'm gonna just make a practice of looking diligently, and if I see anything that I should go look at, I will holler at you.
Okay.
And that way, if we see something, you know, I may say, well, this is how. I mean, I might. It might be that I'm like, okay, well, I should sell mine for X dollars. You know, that's what would make it worth it to me, so I could do something. You know, I'll get that figured out too. But yeah, okay.
Yeah, absolutely.
Okay. Well, thank you, mister.
Oh, sure. We'll we'll get it figured out eventually, and you'll be really happy with whatever we figure out. So I'm not worried about it.
I'm sure. Okay.
Just don't start putting tons of money into that place, because I think it's not going to come back 100% for the most part.
No, I mean, it's gonna be $60,000 because that's what the bank approved and signed off on.
Right.
But like, a third of that is just re-sheetrocking and insulating it, which has to be done because the walls are, the redness. I mean, the walls are bad, so that has to be done. That's not even a question. And the other, one of the things I'm trying to figure out is if I can restore the windows instead of buying windows, because the windows are so expensive,
Right.
I don't know if the bank will sign off on that because I think whatever. So.
Well, I can tell you that if Leela comes down to look at it, she would not be interested with replacement windows. She wants original.
Right.
So.
Well, I mean, that's the thing. So I'm gonna.
That's the thing that you don't know what people are going to want,
I know.
And so certainly the roof is the roof, and then that's something less than they have to worry about. But somebody might say, "Oh my God, why did she choose that color?" You never know.
Or why did she put a shingle roof instead of a metal roof?
Right.
I know. But I'm just looking at it and I'm like, I think I have to proceed as if I'm going to live here for a while.
Yeah, sure.
And that's the one thing I've got to figure out about the windows. I'm trying to get someone to.
Okay, are we back yet? It's 10:10, 10:11. So let's just refresh on this, everything we've gone up to this point. And I'd like some ahas. Anything that you've pulled out of the material that we've just covered, I'd like you to jump in.
Referrals are nice.
Say it again.
Referrals are nice.
Yeah. Yep. What else?
The value of capping, especially in the beginning of the year.
Yes. Yeah, if you get as you're rolling along in your first year of business, it takes a while to get that built up a little bit. But once you do, if you just keep your head down and just keep going, and then what often happens is by the time you get to the end of your first anniversary year, you've got your pipeline has got a lot of different transactions in it. So they come popping out soon thereafter, and you really knock out that cap really quickly. So there are some agents that will cap in their first month. It's not their first year, but their second or third year they'll cap very, very, very early in the game, and then some will take a little longer. But eventually you'll find yourself capping in 3 months or so and enjoying 7 months worth of 100% commissions.
That would be a beautiful thing.
Oh, it is. Just believe and it'll happen. What other thoughts do I have?
You have to be disciplined with your money coming in. You have to set some money aside. You can't go spending your full commission. You got to have that self-discipline.
And as a business owner, you should. That's part of the skill that you're going to be developing. If anybody else, does anybody here have other businesses that they own?
I do too.
So those of you that do have other businesses, unless you have, a strong accountant or bookkeeper that tells you what you can do, if you're involved in it yourself, then you understand these principles already. Okay. All right. So now that we've covered that model, the economic model, we talked about the flow of money. Now let's talk about building our futures. So what you want to do is plan your future with profit. So being able to take some time to figure out what it is that's important to you and what it's going to take to meet those personal goals that you have, or financial goals, business goals that you have. You figure out how much profit is it going to take. And remember, profit is what's left after the expenses are deducted. So from that profit, so when you figure out what your goal is, whatever it may be, I don't know. I'm not sure if they give us an example, but let's just say your goal was 100,000 at the end of the year. That's what you want in your bank at the end of that's what you want there at the end of the year. You would divide your net profit by 60%. And then you would divide the gross profit by 40%. And so this is going to give you your targets, what your gross income what your GCI would have to look like. You'd get that number. And then you would take and divide that GCI by the average commission income that you have on your home sales. And then you anticipate your cost of sale and your operating budget. I mean, as you step through it, it makes more sense. So, for example here, I even picked out the number they did, 100,000. Say that was your net profit goal. So you have to take your net profit goal and you divide it by 60%. And then you're going to come up with a number that looks something like that, 166,666. Now, to figure out what did it take to get that, what's the gross commission income that you would need to generate. You would do that by dividing it by 40%. Because remember, we talked about before, we said 30% for cost of sales, 30% for expenses, and we want a 40% profit. So you got 30, 60, and then 40. So that brings you to that 100%. So if you divide your gross commission income, the profit, by 40%, you're targeting a GCI of 416,666. So what they're doing here is they're saying, okay, if that's the target, then how many deals is it going to take to get there? So if you figure out what your average commission is, so the way you figure that is by taking your what the average sale price is in your market times 3%. That gives you the average commission. So in this case, they were using 7,500 as being the average commission in that area on their home sales, which gave them a target of 56 sales closed. You need 56 sales closed. And then you look at your anticipated cost of sale, and which is going to be the royalty that we've been talking about, and the cap. So in this case, their cap here, it's funny, it's the same numbers you have, one of you has, was 23,000. So 23,000 was the cap plus the royalty. So you add that on, and then you figure out what your operating expense budget is going to be, which is, we want to keep that at 30%. This is following a model. So we want to keep that at 30%. So that is, that 30% of that GCI is 124,999. So you don't want to exceed the 124,999 for your operating expenses. Those are the ones that can happen whether you get a sale or not. The cost of sale, and the one just before that, that's going to happen only when you have a sale. So the neat thing about this is you have the formula now. So you can use your own numbers, plug your own. If your average commission isn't 7.5, then you're going to need to adjust this accordingly. So like in our area, our market, I believe we're like upwards of 165,000 average sale. I mean, that's like average. There are some markets where you can't get something that inexpensive, but there are other markets where in our same market center that you can get things for a whole lot less than that. So if we just took the average of 165,000 times the 3%, our, instead of using 7.5K as mine, I would be using 4.9, $4,950 actually is an average commission in the market that I serve. So I would plug those numbers in instead to get the calculate how many sales I have to have to get this $100,000 net profit. Any questions on that? It's math. So we're talking about best practices here. So your first best practice, if you want to set yourself up for success, is to gain clarity on your big life hopes and dreams. Like, why are you doing this? You know, why are you getting up in the morning and going to work in your real estate business? There's a reason for that. And so you really have to get clear on what that is. That way you can then set up your personal and your business budgets. And then you'll be able to set up your business entity, whether you're going to be working as a sole proprietor, or whether you're going to set up for an LLC or a corporation. How do you want to set your business up? And then the next thing, you're going to want to open some bank accounts. One bank account, an account for your taxes. This is where you squirrel away your anticipated tax obligation. You need to have a separate account for your expenses, the money that you're going to put in to cover your expenses. And then of course, that's where your money is drawn from as you pay those expenses. You know, whether it's your gas for your car, your dues, signs, cards, all these things that are expenses. You'll want to pull them out of the account that you have designated as your business account.
So, Sherry, I got a quick question. I got to interrupt you on that. So in order to open a business account, you have to have a DBA. So you have to actually file for an EIN number to do that.
This is if you are going to be operating under a DBA. If you're going to be operating as an independent contractor for yourself, you can use an account with your own name in it. Use your own name on it. This is however you have set up your personal your business entity. So yes, you're absolutely right. If you're going to be not known as your own personal name, then yes, you're right. For the average, for the like the majority of the agents that come into business, into real estate, the majority of them are actually operating under their own name. I mean, I've gone the whole gamut, and right now, I happen to be at a place where I'm just operating as an independent contractor. I'm known, my business name is Share Brundage team at Keller Williams, Upstate New York Properties. But that's not a DBA. Everything I do, I put myself out as my legal licensed name, and then my identification, where I work, what my team name is. Okay, so
Sarah, I have a quick question.
Yep.
So it sounds like maybe you were an LLC in the past?
I was a C corp in the past.
Uh-huh,
It wasn't with Keller Williams. It was with my own company.
uh-huh.
So that's a whole nother thing.
Yeah.
For me, it's like for right now, I don't want to deal with the extra
Taxes.
tax filing and stuff. So.
Yeah. Okay. Thank you.
Mm-hmm. You have a lot of different opportunity there in all those different ways of doing business and running your business. They all have their own special advantages. Like a C corp, there's just, you just need to talk with an accountant, talk with someone who knows, an attorney perhaps. Talk to the people who know that can best advise you on how to run your business. But regardless of whether you're doing it under a DBA or you're doing it under your own name, have accounts, bank accounts, and your debit cards, have them specific to your real estate business, and in that way you can keep track of your money, and you're not mixing your personal money with your business money.
Yeah, thank you.
Okay. So here where it says download and use the MREA chart of accounts. Gary has really simplified this for most of us. And so like I was just going through the models course, and there was a lot of very nice worksheets and things that I was able to use and pull out of that to make sure that my Quicken was broken down into the right categories. It makes running those P&Ls a lot easier. So there's you'll find these worksheets and things are available to you. Just go into Connect and search for what you want, or even Google it. I mean, you'll find them pretty easily. But like I have in my hand, these are the ones I've been working off of recently, and so they break down everything. They break down the expense categories, and then this one actually is all about expense categories. Things like the money that he has some very simple ones like education, coaching, supplies, and office. These are different categories. Communication and technology, automobile, professional services, salaries and benefits. This is even if you're paying a contractor for like staging or that, they're not on your payroll, but when you pay them, this is where you put them under that category. And then you've got your lead generation expenses, and you have your listing management expenses, and you have some occupancy expenses. That's if you rent a cubicle or an office space. And then just the storage unit you might have. It's really nicely broken out for you. And then that way, when you're pulling a P&L, you can see whether your expenses are within 30% of your GCI, what your cost of sales are. So that's why you want to download that MREA chart of accounts, so that you can get on the same page with our models. And then purchase and download some tax accounting software. I've used the bells and whistles of QuickBooks, and I also have currently just using Simple Quicken. And then so you want to do that, and then you're going to want to hire an accountant, a CPA, and an attorney. So these are your the professionals on your team that in your business, where you can call them to ask these questions, and it's important to let those professionals do what they do best, and you do what you do best, which is to list and sell properties, and maybe consult, and maybe perhaps you're you're guiding other agents or team building or whatever it is that you're doing, do those things that you do the very best, and then leave the others to your accountant, a CPA, or an attorney. And you need to set dates to calculate and pay your estimated taxes. Just make it part of your routine. Oh, I missed it. You can't hit the button wrong. And so, let's see, from current slide. Then the last thing on this was, to prepare for your future, like your insurance, savings, and investments. So when you look at these best practices, any thoughts or any of them jump out on the page? It's something that you hadn't thought of and I'm going to start doing.
I'm going to open up a separate banking account. It just makes it easier. You can keep track of your funds a little easier. What I've done too in the past too is dedicate a credit card just for business expenses. And basically your bank statement is your expense sheet. So I've done it in the past that way too.
Yep. Anybody else?
Are you a sole proprietor then, Chair?
Mm-hmm. Yes. So when I do my taxes every year, I use my Schedule C. I fill out a Schedule C, and it's share brundage real estate. Basically my role, associate broker, and I have my, for my income, I collect up my 1099s that I get from the brokerage, the market center. I also get the profit share statement because that's found in a different location. You get that off of my KW out of the reports there. It shows you how much you received, because they don't withhold taxes from that either. It's all part of your income. And then the rentals, things like that. The money that I have that is being accounted for under my real estate activities. And then underneath that, as you fill out the Schedule C, there's a place for expenses, a place for a breakdown for expenses. So my cost of sale, everything is there. Now on your 1099, they've already pulled out the cost of sales. So you're getting a 1099 net. It's not the gross. So it's the actual numbers that you need to use. So you'll be taking your expenses off of that. And then your bottom line, that's what your self-employment taxes, your self-employment is calculated on that. And your any taxes that are owed. And then of course you get credits for the taxes you've already sent in that you've had them withhold, or you sent it in, paid on it. So it's pretty simple, and that is how the independent contractor is handled. It's handled with a Schedule C.
Sure, this may be more a question for an attorney, but as a sole proprietor, do you have any concerns about liability?
That is
That's a whole other.
I hear you. And yes, there's always that. I mean, being a sole proprietor, I am not, I haven't, my personal assets are not protected. So that would be the reason why you'd want to go and have an LLC or have a C Corp, or, just, that's why you'd want, or what was the other one? There's another status in there, but
S Corp maybe?
Yes, S Corp. Yes, exactly. And S Corp, the benefit of that is you have some practice, some protection, but it's also, you can flow it through your regular, your normal tax return. So those are all different ones, and getting educated on the benefits of each would be very good for you. And for me personally, right now, I'm not holding myself out there. I'm not at super risk at this point.
Okay. Yeah. Thank you.
Yep. Anybody else? Okay, let's see where we go next. Okay, now we're going to talk about some daily success habits. Ahas to achievement. All right. So as we look at, if you just kind of think about what we've been talking about, how has your thinking changed? What ideas or mindsets do you have are new? You think about it when you came into today's class, based on what you knew before you came in, based on the space you're at in your real estate career. Is everything that you've seen today stuff you already knew, or were there any things here that have been added to your thought, your mindset?
Sure, I have a question.
Mm-hmm.
The profit sharing, how does that technically work?
How that works is, and there's awesome classes on this too. Okay. Profit share. What happens is when you sponsor someone into Keller Williams family.
Oh, okay.
And when they have a sale, when they have closings, then what happens is their contribution to the closings that month are calculated in with the rest of them, and then you receive a percentage of the profit that's available in the profit pool. So it's there's a lot more to it than that, but all I know is that the more people that you've introduced into our family, the better, and the more that you help them to be, even though you don't have to be the one teaching them or anything, but just being a shining light and being encouraging, they will become profitable. They themselves will learn to achieve, and you'll be thanked for that. And that's what the profit share is about. So there are agents that receive a lot. It's all depends on how big your tree is, how many people you've brought in. But whether it's $100, $200, $300 a month or more, as your tree grows, it's a great source of passive income, and it is passive income. So naturally, at the end of the year, you have received X number of dollars worth of passive income if you've been participating, and then that's your income. It comes right into your bank account, and you have to account for it for the IRS. So it becomes part of your gross proceeds.
Okay. Thank you.
You're welcome.
I have a question, and this is probably a whole nother class again. How do the commission splits work when you're on a team?
When you're on a team?
Yeah.
Well, we have there's a model for that. And if you were following the model, then there's essentially you split whatever you do, you split your each sale with the team. But what you're getting, and then what you get from the team for that agreement is really dependent on the team that you're working with. Like, for example, on my team, and I am not trying to recruit here. On my team, I have a professional photographer who does 3D, that does the 3D photography for our listings. And that that includes the Matterport, which gives that true virtual tour. Not a virtual tour in the sense of, you know, a series of pictures with music and transitions. It's an actual 3D tour. And then we provide transaction management, training. We provide leads. We provide the help that you need to close a lead. Like, just a sec. I hate this. But anyway, you're gonna you. So we do have the like every transaction that my newbies go into, that they're working, you know, I'm there with them side by side, and other team members too, to be able to help them get through help them with the negotiations, help them to get to a successful negotiated contract, and then to help them work through the transaction management throughout the process. There's just a lot of different marketing. You know, we have a person that does marketing. We have someone that handles that creates the assets that you need to do good Facebook marketing. So anyway, it's just a big long list. So those are some of the things that you get for being on the team. But in return for that, the agent that comes on as I was describing mainly a buyer's agent. An agent that comes on the team has agreed to participate and to you know, meet with they've agreed to work with you for like 1 year. And then as a result, their business is assured because the leads are there. We use command to the maximum, so we have the maximum exposure to all the contacts the team has. Usually a team will have at least 4,000 people in the database, and you're taught how to put your own people. You know, there's a lot to it. So bottom line is, one of my team members has a sale. Let's just say it was a $300,000 sale. They split it with the team. They split it with the rainmaker. So they're going to be paid as if it were 150,000, because that's half of 300,000. So they're going to have the same thing where they have the market center will take that $150,000 sale, for example, and there's gross commission on that, which would be $4,500. The market center will keep 30% of that for that team member's cap, and 6% of it for that team member's royalty. And then what's left over is that team member's net income for that deal. The benefit, though, also of being on a team is that you do not have a $21,000 cap. You only have in our case, it's usually like in our case, since 21,000 is the full, it's a half cap. So once they reach 10,500 in company dollar provided to the market center, they then go on 100%. So then their share is so in that case, in that sale, they would have received a check for $4,500. So that's how it works. So, but you know, so that's based on a team where the split is 50-50, 50% everything you do, 50%, so you share. So there may be other splits in different teams, but if you're considering going on a team, you need to ask what are the benefits of joining the team, and you know, what is the team split? Do you understand?
Yes, that was very helpful.
Good. I've been in I was in another company that, I don't know if you ever remember, Realty USA. So at Realty USA, they were one of the first ones in the area to encourage teams. They did not have a team model like we have with Keller Williams, but it was there. We basically struggled on that, how to figure that out. But with with Keller Williams, when it gets to the point where you're ready to start a team or to join a team, they've got the roadmap is right there for you.
Mhm. Great. They've thought of everything.
Oh, yes, truly. They
Yeah.
have. Well, there's a lot of minds working on it, and it's been going on since, well, early, I think Gary was licensed in the 70s, and I think it was like mid 80s when he started here. I don't have the dates down exactly, but I do know that I started my career in 1985, and in the early 90s I stumbled across the MREA book and was reading through that and studying that. So it's pretty solid. It doesn't matter. It's all these years later, and it's still relevant.
Mhm.
So
Yeah. Thank you.
yeah. Any other questions? So if we're going to talk about the elementals, the goals that you need to set your career on fire, these are the real basics. These are the things that will make a difference no matter what. And that is consistently feeding your command database with 10 contacts added each day. Is there I'd like to know how the buy-in for command has been in this group. Is it how many of you are actually using it? Most of you are. You are good, Stephen. And I know some of you just you've got yourself turned off, no cameras, so I don't even know. But digging into using command is it's just the best thing that you can do. You know, it has its quirks and its problems, but right now they're working very, very diligently at, instead of building new things out or trying new things, they're working on making sure that what is there works. So consistently add 10 contacts to your database every day. Talk to 10 people. Just have 10 conversations a day. Now, sometimes these conversations are held via text, messenger. There's lots of different ways that people like to communicate today. And then there's the good old fashioned get them on the phone and talk to them. So these people that you're talking to, the conversations aren't really about, do you have something? Can I sell you something today? Do you have something I can list today? Those aren't the conversations. The conversations are things that develop relationships, whether it's checking in with people, seeing how they're doing, and just finding out if there's something, uncovering something that you can encourage, something that you can help with. Find out if there's somebody that they know that could help, but letting people know what you do this is your career, and making sure that you're not a secret agent. 10 handwritten notes. It's funny how you get the thank yous for the thank yous or the thank yous for the note. People love that somebody cared enough to write something, put a stamp on it, and mail it to them. And then there are other systems. AM Cards is the name of one of the systems. It's appreciation marketing, which makes writing cards and sending cards easy. And you could do it systematically. There's different ways, but having a stack of note cards and first thing in the morning with your coffee, grabbing 5 to 10 of them, have them ready to write out, and you can find things to write about with everyone. It could be thanking somebody for the time they took to talk to you on the phone. You could have been looking through your social media and seeing something that you wanted to send them send them something to them, actually physically send them something, congratulating them on maybe some achievement that was in there, making comments like that. And then the last one there on this one is the 10 home previews per week. I think that it's a critical, especially for agents, for new agents especially. You need to know what the inventory looks like. You need to get inside of these places if you can. Whether you have somebody to show it to right now or not, figure out a way. You might be looking at videos, or might be looking at home tours that that they had online, or you might be driving by in neighborhoods, but just becoming very aware of what is out there, because you're going to be using, you need to know these properties because you're going to be using them for CMAs, market analysis. You use a CMA to determine the right pricing for a property you might be listing, or, and many times you've got a buyer and you want to be able to show the buyer, you want to give them a market analysis on the house that they're contemplating, so that you can give them an estimate of value there. But unless you actually get a chance to learn these properties, where they are, what the neighborhoods are like, you don't, it's hard for you. So you should make it a point to get familiarized with houses every single week. 10 is a number they threw out there. Now this is enough activity here to keep you engaged in your business, your new business. Any comments on this? Does it look like too much work? All right. So these are things that you need to learn your scripts. Lead generating, you need to lead generate scripts that will help you uncover motivations, scripts that will identify objections, scripts that will close deals, scripts that speak in terms that the customer understands, and to build confidence. These are reasons why it's so important. Does anybody here participate in any kind of script practice? We're not doing this. All right. So understanding that when you're working with making calls, you have to make sure that you do not violate the do not call list. So you're going to hear that everywhere. So you should subscribe to the registry, update your call list regularly, know the state and federal laws, check before you call, and honor your consumers' requests. All right. So I guess at this point, I told you it might be done early. Is there anything that you'd like to talk about at this point?
The Do Not Call Registry, where do I find that?
Well, at this point, I would just Google it and look for a link. I'm not, for me, my business is, my calls are made to people that I know, people I have relationships with. So I haven't encountered this. I personally do not cold call, but you need to be aware of it if you do want to cold call. And then there are some, I would go into command, and I would go into connect and seek it out, see if they have a link there. Does anybody know whether they do?
I don't want to call either, so.
Yeah, no, there's no need to. Well, really, there is no need to cold call. We have enough people in our sphere of influence and friends of friends and people raising their hands looking for help. In your social media feed, you'll see chatter about that. There's just so many ways. And if you're mailing a letter, there's nothing. That's not governed by any kind of a do not call. So how about, I'd like to know if there's anyone here that has started their goals yet. Have you set it up? Anybody? Okay, what I'm going to do is I'm going to just jump over into command. Just give you an idea, just a jumping off point. So when you first log into Command, you should see a button there that says set yourself up for success by setting your 2021 goals now. Do you see where I am?
Mhm. Yes.
Okay. Oh, thanks. Somebody speak. I can't see your faces. So in here, has anyone actually clicked on that blue bar and started?
Yeah, I have. I've already set 2021 goals.
Fantastic. So did you notice in there where it helped you to figure out how many homes that you needed to sell to get your goal?
I haven't gone that in depth with it. I mean, I'm doing simplistic goals just because this thing reminds you of everything that you do, just like, past due, present, due now, that type of thing. Just simple things, contact goals. I've been doing calendar goals, ideas like that.
Mm-hmm. Okay. So yeah, that's one of the things that makes it, one of the things that makes this whole thing, this whole command is, it's set up to work in so many different facets of our business. So all I did here just now was I just scrolled down on my home page, and this is where it gives you your goals versus actuals here. So when you do go deep enough so that you've got your goals broken down, it'll keep track of you, where you're going. So like for me, it's telling me I'm only 16% on the way for my appointments year to date. And then my contracts, I'm only 9% there. Of course, I'm hoping that will improve as the weather warms up. And then we've got our closed units, how many closed so far this year. And then you've got your breakdown, your goal breakdown. So this is all there. All you have to do is actually follow the guide where you take the guided tour. You just click on this and you go through it. But if you aren't sure of your numbers, these are things that you should get with your MCA or your team leader to have them help you with that. But because then when you do that, you can come down into the reports, which is that little applet on the left, and then here it'll give you information about your lead sources, how your database, the health score. Have you noticed your health score, Stephen, on yours?
Yeah, my health score is just at last, I want to say my health score is pretty low, 30, 34, 35%.
Okay. So each contact that you put in there, the more information that you put in for that specific contact, that's what will jack up this health score here.
Right.
And it's looking at things like, how many have phone numbers, emails, addresses. And then in our area, we do not have the benefit of, the neighborhoods. We don't have that. And in home anniversaries and birthdays, that is basically, that's where you can fill that in no matter where you live, is based on whether or not you put the details in on a person when they closed on it, when they actually closed. So I'm looking at this and I see a lot of room for improvement there, because I can at least get the anniversaries in of the 9 closings that happened this year so far. So this, by having this though, you've got the ability to look at look at your business every day and see where you need to be. So it would be really good for you to dive into this. So it's kind of getting off track a little bit, but I just think that agents should spend more time in planning their day, planning their goals, planning and then executing, because it does keep track of everything that you do as long as you do it through command. Any questions on anything so far?
Oh, this is great.
I hope it was helpful. All right, then, I'm going to say goodbye for now. Let me turn this phone off. We'll say goodbye for now, and I wish you all the very best. And, if you ever have any questions or anything, you can just reach out to me, shareb@kw.com. Okay?
Thank you.
Thank you.
It was great.
Thank you.
All right, you're very welcome.
Thank you.
All right,
Thank you.
you're welcome.